Hello student, welcome to our channel நான் பேச நினைப்பதெல்லாம். In this video, we will see the solutions for sample question paper accounts for the year 23-24. Solutions for part B, analysis of financial statements. Part B has two options, one analysis of financial statements and computerized accounting. In this video, we will see the solutions for analysis of financial statements. Part B. Freedom to choose of method of depreciation refers to which limitation of financial statement analysis? A. Historical analysis. B. Qualitative aspect ignored. C. Not free from bias. D. Ignore price level changes. Solution. Answer C. Not free from bias. 27 or question. Dash is included in current assets while preparing balance sheet as per revised schedule 3 but excluded from current assets while calculating current ratio. A. Debtors. B. Cash and cash equivalent. C. Loose tools and stores and spares. D. Prepaid expenses. Solution. Answer C. Loose tools and stores and spares is included in the current assets while preparing balance sheet as per revised schedule 3 but excluded from current assets while calculating current ratio. Question number 28. Debt equity ratio of Dhamaka Limited is 3:1. Which of the following will result in decrease in this ratio? A. Issue of debentures for cash of 2 lakhs. Issue of debentures 3 lakhs to vendors from whom machinery was purchased. C. Goods purchased on credit of rupees 1 lakh. D. Issue of equity shares of 2 lakhs. Solution. Debt equity ratio is equal to debt by equity. That is given, that is 3:1. Therefore, we get long-term debit is equal to 3 times of shareholders' funds. We know that shareholders' funds includes share capital and reserves and surplus. If denominator increases, that is shareholders' funds is increases 2 lakhs, then ratio decreases. Therefore, answer is D. Question number 29. Statement 1. Sale of marketable securities will result in no flow of cash. Statement 2. Debentures issued as collateral security will result in inflow of cash. A. Both statements are correct. B. Both statements are incorrect. C. Statement 1 is correct and statement 2 is incorrect. D. Statement 1 is incorrect and statement 2 is correct. Answer. Statement 1 is correct, but statement 2 is wrong. Statement 1 is correct. Sale of marketable securities will result in no flow of cash because marketable securities is cash and cash equivalent. Hence, sale of marketable securities is no cash inflow and cash outflow. Statement 2 is incorrect. Debentures issued as collateral security will not result in inflow of cash. Therefore, answer is C. That is, statement 1 is correct and statement 2 is incorrect. Or questions. What will be the effect of issue of bonus shares on cash flow statement? A. No effect. B. Inflow in financing activity. C. Inflow in operating activity. D. Inflow in investing activity. Solution. Answer A. No effect. That is, issue of bonus shares not affected the cash flow statement because bonus shares are issued by utilizing the surplus funds already available in the reserves and surplus. Question number 30. Aditya Sunrise Limited provides you the following information. Particulars as on 31/3/23 and 31/3/22. 10% bank loan nil 31/3/23 and 31/3/22 1 lakh. Additional information. 1. Equity share capital raised during the year rupees 3 lakhs. 10% bank loan was repaid on 1/4/2022. 3. Dividend received during the year was rupees 20,000. 4. Dividend proposed for the year 21/22 was rupees 50,000, but only rupees 20,000 was approved by the shareholders. Find out the cash flow from financing activities. A. Rupees 1,50,000, B. Rupees 2 lakhs, and C. Rupees 1,70,000, and D. Rupees 1,80,000. Solution. Cash flow from financing activities. Proceeds from issue of equity shares. Proceeds from issue of equity shares is a cash inflow, that is 3 lakhs. Repayment of bank loan is cash outflow 1 lakh. Dividend paid for 21/22 rupees 20,000 is outflow. So totally cash flow from financing activities is 1,80,000. In this question, dividend proposed for the 21/22 was 50,000, but only 20,000 was approved by the shareholders. So, only cash outflow is 20,000 only, not 50,000. Here we can understand one thing. Dividend received during the year. It is not a financial activity. It relates to the investing activity. Then here 10% bank loan was repaid on 1/4/22. That is 1/4/22 is beginning of the year. So no interest should be provided. Question number 31. Classify the following items under major heads and subheads, if any, in the balance sheet of a company as per Schedule 3 of the Companies Act 2013. 1. Loose tools. 2. Loan repayable on demand. 3. Provision for retirement benefits. 4. Prepaid insurance. 5. Capital advance. 6. Shares in listed companies. So, see here, serial number, item, heading, subheading. First, loose tools. Current asset. Under the heading, current asset, it is subheading, it included in inventories. Second one, loan repayable on demand. Loan repayable on demand. Therefore, it comes under current liabilities. It is short-term borrowings. Provision for retirement benefits. Retirement benefit is a long-term one. Therefore, it comes under non-current liabilities, subheading long-term borrowings. Prepaid insurance is a current asset. Short-term other current asset. Under the heading other current assets. Capital advances. Heading non-current assets. Subheading long-term loans and advances. Sixth one, shares in listed companies. Heading non-current assets. Non-current investments. Subheading. Question number 32A. A company had a liquid ratio of 1.5 and current ratio of 2 and inventory turnover ratio 6 times. It had total current assets of rupees 8 lakh. Find out annual sales if goods are sold at 25% profit on cost. 25% profit on cost. Solutions. Given liquid ratio 1.5, current ratio 2, inventory turnover ratio is 6 times. Given current asset is equal to rupees 8 lakhs. Current ratio is, we know that, current asset by current liabilities. Here current ratio is given, current asset 8 lakhs is given, therefore current liabilities is 4 lakhs. Liquid ratio, liquid assets by current liabilities. Then liquid ratio 1.5, current liabilities already we find out 4 lakhs. Therefore liquid asset is equal to 6 lakhs. But liquid assets is equal to current assets minus inventory. Liquid asset 6 lakhs and current asset is 8 lakhs given. Therefore inventory is equal to 2 lakhs. Then inventory turnover ratio equal to cost of revenue from operations by average inventory. Here inventory turnover ratio is equal to 6. Average inventory is 2 lakhs already found out. Therefore cost of revenue from operation is equal to 12 lakhs. After that, gross profit equal to 25% profit on cost. They are given 25% profit on cost. Therefore, 25% of 2 lakhs, 12 lakhs is equal to 3 lakhs. Then we know that sales is equal to gross profit plus cost of revenue from operation. That is rupees 15 lakhs. 32B. Calculate debt to capital employed ratio from the following information. Shareholders funds rupees 15 lakhs, 8% debenture rupees 7 lakh 50,000, current liabilities rupees 2 lakh 50,000, non-current assets rupees 17 lakhs 50,000, current assets rupees 7 lakh 50,000. Solutions. Given shareholders funds 15 lakhs, 8% debentures 7 lakh 50,000, current liabilities 2 lakh 50,000, non-current assets 17 lakhs 50,000, current assets 7 lakh 50,000. Debt to capital employed is equal to long-term debt by total capital employed. Long-term debt is already given 8% debenture 7 lakh 50,000 and total capital employed is equal to shareholders funds by long-term debit. Shareholders funds is 15 lakhs, long-term debt is 7 lakh 50,000. Therefore total capital employed is 22 lakhs 50,000. Therefore debt to capital employed is equal to 1 by third, that is 0.33:1. Question number 33. From the information extracted from the statement of profit and loss of Z Limited for the year ended 31st March 2022 and 31st March 23, prepare a common size statement of profit and loss. So, 2023, 22-23 and 21-22. Revenue from operation 22-23 8 lakhs, 21-22 1 lakhs. Gross profit 60% 22-23 and 70% 21-22. Other expenses 2 lakh 20 22-23 and 2 lakh 60 21-22. Tax rate in both years 50%. So, solution, common size statement of profit and loss account. So, we have to prepare this in the tabular form. Particulars 22-23, 21-22, then percentage of revenue from operation 21-22 and percentage of revenue from operation 22-23. Revenue from operation 8 lakhs. Other income nil. Total 8 lakhs. 21-22 revenue from operation 10 lakhs, other income nil, therefore total 10 lakhs, therefore both are 100%. Less expenses, cost of revenue 22-23 3 lakh 20,000, other expenses 2 lakh 20,000, therefore totally 5 lakh 40,000, therefore profit before tax 2 lakh 60,000 less tax 50%, that is 1 lakh 30,000. Therefore profit after tax 1 lakh 30,000 for the year 22-23. Similarly 21-22 cost of revenue is 3 lakhs, other expenses 2 lakh 60,000, totally 5 lakh 60,000. Therefore profit before tax is equal to 4 lakh 40,000 less tax 50% 2 lakh 20. Profit after tax is equal to 2 lakh 20,000. So we get the percentage. Here 22, 23, 21, 22. That is 3 lakh 20,000 by 8 lakhs into 100. Therefore 40%. Here 3 lakhs divided by 10 lakhs into 100 we get 30%. Other expenses 27% 22-23 and 26% 21-22. Like that we have to calculate. Profit before tax is 32.5%, here 44%. Tax is 16.25%, here 22%. Profit after tax 16.25%, here 22%. Question number 33 are questions. From the following information, prepare comparative statement of profit and loss. Particulars, note number and 22-23 and 21-22 is given. Here revenue from operation 10 lakhs, here 8 lakhs. Other income 2 lakh 20,000 and 1 lakh 50,000. Cost of materials consumed 4 lakhs and 3 lakhs. Change in inventories of finished goods and work in progress. 2 lakhs, 1 lakhs. Other expenses 15% and 10%. Tax rate both the years is 30%. Solutions. Comparative statement of profit and loss. So this is the format. Particulars 21-22 and 22-23, then absolute change and proportionate change in percentage. Revenue from operation 21-22 8 lakhs, 22-23 10 lakhs. Therefore, changes is 2 lakhs and percentage change, it is 25%. Other income 1,50,000, here 2,20,000, absolute change 70,000, 46.7%. Total revenue 9,50,000, 12,20,000, 2,70,000, here 28.42%. Cost of material consumed 3 lakhs, here 4 lakhs, difference 1 lakh. Change in inventories of finished goods 1 lakh, 2 lakhs, here 1 lakh. Other expenses 80,000, 1,50,000, absolute change 70,000. Here cost of material consumed is 33.33%. Changes in inventories 100%. Other expenses 87.5%. Therefore, total expenses 56.25%. Profit before tax 4,70,000, 4,70,000. Nine lakh 50, 4 lakh 80. Here 12 lakh 20, 7 lakh 50. Profit before tax 4,70,000. Here also 4,70,000. Tax rate is 30% for each year. Therefore, tax is equal to 1,41,000, 1,41,000. Profit after tax is equal to 3,29,000. Here also we get 3,29,000. Question number 34. Prepare cash flow statement from the following balance sheet of Arya Limited. Particulars note number year 31/3/23 and 31/3/22. 1. Equity and liability, shareholders funds. Share capital 10 lakhs, 8 lakhs. Reserves and surplus 6 lakhs 40,000, 5 lakh 40,000. Long-term borrowings 1 lakh 50, 1 lakh. Trade payables 30,000, 12,000. Short-term provision 30,000, 28,000. Total liabilities 18 lakhs 50,000, here 14 lakh 80,000. Assets. Non-current assets. A. Property, plant and equipment and intangible assets. 1. Property, plant and equipment 7,75,000, 4,90,000. B. Non-current investments 90,000, 50,000. 2. Current asset. A. Inventory 6,20,000, 4,13,000. Trade receivable 3,20,000, 4,94,000. Cash and cash equivalents 45,000, 33,000. Therefore, total 18 lakhs 50,000, here 14 lakhs 80,000. Notes to accounts. Reserves and surplus. General reserve 5 lakhs, 31/3/22 4 lakhs 30,000. Capital reserve 60,000, 50,000. Surplus, that is balance in statement of profit and loss 80,000, 60,000. Therefore, reserves and surplus total 6 lakh 40,000, 5 lakh 40,000. Second, long term borrowings 10% debentures 1 lakh 50, 1 lakh. Short-term provisions, provision for tax 30,000, 28,000. Here tangible assets like plant and machinery 7,75,000, 4,90,000. Additional information. Tax provided during the year is rupees 17,000. Depreciation charged on plant and machinery during the year amounted to 1,20,000. 3. Non-current investments costing 30,000 were sold for 40,000 during the year. Gain on sale of investments was credited to capital reserve. Additional debentures were issued on 31/3/23. Solution. Cash flow statement for the year ended 31st March 2023. First, cash from operating activities. Here, first we start from profits before tax and extraordinary items. 1,07,000. See working note. Net profit after tax and extraordinary items. Net profit 80,000 minus 60,000, 20,000. Add transfer to general reserve 70,000. Add provision for tax 17,000. Totally net profit before tax and extraordinary items is 1,07,000. Then add non-cash and non-operating expenses. Here depreciation on plant and machinery is 1,20,000 already given. Interest on debentures 10,000. Here interest on debentures 10,000. 10% as on 31/3/22 for 1 lakh. 1 lakh into 10%. The 10,000. Totally 1,30,000. So cash from operating activities before working capital changes 2,37,000. Increase in trade payables 18,000. Decrease in trade receivables 1,74,000 and increase in inventory 2,07,000. Totally 15,000 negative figure. Therefore cash from operation 2,22,000. Less tax paid 15,000. So we get cash from operating activities 2,07,000. Second part, cash from investing activities. Sale of investments 40,000. Purchase of investment 70,000 outflow. Purchase of plant and machinery 4,05,000. So see the working note here. Investment account. Working note 2. Investment already beginning starting 50,000 here. Then some investment for sold for 40,000. It gained 10,000. It should be transferred to capital reserve. Therefore 10,000 transferred to capital reserve. Then by balance carry down 90,000 is given. Therefore balancing figure purchases 70,000 here. Investment outflow. Like that, plant and machinery. Working note 3. Plant and machinery. Opening balance machinery 4,90,000 is given. Closing balance 7,75,000 is given. Depreciation is already provided 1,20,000. Therefore, balancing figure purchase on plant and machinery, that is cash outflow 4,05,000. Therefore, Cash used in investing activities is 4,35,000. Next one, cash from financing activities. Issue of shares 2 lakhs, issue of debentures 50,000, interest paid on debentures 10,000. Therefore, cash from financing activities 2,40,000. So, net cash flow during the year total of A plus B plus C. We get 12,000. Then add opening cash and cash equivalents 33,000, closing cash and cash equivalents 45,000. See here, provision for taxation. Tax paid here 15,000. It is operating activities 15,000.